Hello everyone, this is today's video analysis for October 4th, 2019. Today, we're taking a look at the GBPUSD, Great British Pound versus the US dollar for today's trade analysis. Now, before I begin the analysis, it's important to recognize the fact that in about 40 minutes from the recording of this video, 8:30 a.m. Eastern US time, significant news out of the US, earnings, non-farm payroll, unemployment rate popping up, and could significantly change everything we're talking about here in this analysis. So keep an eye on that news just about 40 minutes from now. Anyway, we're starting here on the daily time frame, pound dollar. I really think there's a setup, two different setups depending on the time frame you're looking at. So if we get a positive or negative reaction for the US dollar, we actually have two different things that we can look at. Let's zoom it in here. On the daily. As you look at it here on the daily, and I'm just going to take this black box right here and grab a hold of it if I can, and I'm going to put it right here. So as you look at it here on the daily, we see over the past week or so, let's count it out today, 1, 2, 3, 4, 5, 6 days, we've been stuck between here on the daily time frame, the pink zone 1.2340.25 and the green zone 1.2285 2260. Pretty clear. It's not too hard to see. We saw a challenge yesterday above here. We saw a couple of days challenge below here, but for the most part, we've been holed up inside here. So if we get any positive movement for the USD goes up after the non-farm payrolls news, it would be interesting because we are holding resistance here at the pink zone, and we would expect it to go down, challenge the green zone, and maybe even break the green zone and continue this previous downtrend that we see right here. That would be on positive motivation for the US dollar after the non-farm payrolls news. So I think that's a pretty interesting thing. Something else about this, Fibonacci from the low to high of the previous uptrend, where the black trend line is here, measuring that with Fibonacci, the 0.382 Fibonacci retracement level sits at 123.44. That's top of the pink zone. We're holding underneath there as resistance on the daily time frame. So everything here, if you look at it solely on the daily time frame, tells us that we're at resistance at the pink zone under the 382. If there's positive motivation for the USD after non-farm payrolls, we could be looking for this to go down, target the green zone or lower levels within the direction of the most recent trending action. So that's one setup that we might consider, again, on positive motivation for the USD after non-farm payrolls. Now let's take it down to the 4-hour time frame. Now we see a little bit of a different picture, don't we? In looking at the 4-hour time frame in the past day or so, we actually see the market has been above and is challenging this pink zone as support. 123.40.25 is now acting as a support above all of these resistance back here. You see all this resistance along the pink zone for the past 6 days or so, and now we're sitting on top of that as support. So if we look at it in that fashion, we're saying, hey, if we get some negative motivation for the USD after non-farm payrolls and this dollar begins to fall, it more likely be that we want to look for opportunities to buy the GBPUSD sitting on top of that pink zone, looking for it to go up, challenge the yellow zone, break the yellow zone, which it didn't do here, maybe into the blue zone or higher levels as it goes back up. So really depends on the time frame you're looking at it here, how we can digest this information. Whether we're looking at resistance at the pink zone under the 382 on the daily, or support around the pink zone here on the 4-hour time frame. So I think really it could go either way. We really want to pay attention to the news, which way the dollar is going to go, rise or fall, and then we could potentially take our trade setups. I do think, at least right now, if you were to ignore the news, take the news out of the picture, I think there's a little bit more of a bearish expectation because of the candle setup we see here. The long blue candle, the smaller body long wick on top, long red candle, and it's sitting here underneath the 382. I might be leaning towards taking it underneath 123.25 and for it to go down, especially if we see any upside behavior for the US dollar. But again, all that could change not too long from now. So we'll keep an eye on the news, keep an eye on both sides of this, because I think there's an opportunity in both sides of this pound dollar, and look for the next setup for our next trade.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.